Hello everyone, this is video number 3 in the series of MUN IO Tech's training videos. In this video we'll be discussing how do tuition fee and tuition credits work. Now this is an important aspect for all international students. I'll say for all students but mainly international students because international students pay higher portion of tuition fee, so it's very important for them to understand this concept. Again, I'll be going through this with an example just to make you understand how the tuition credits work. Now, this is a general tuition fee form which we see, and if you don't know how to get it or where to get it from, you can go to my video number 2 in order to access or how to get tuition form from MUN self-service and what this tuition form means. In order to understand that, you can go to video 1. But basically this tuition form will have all your details of which program you studied and how many months you were part-time student or how many months you are full-time student, and the most important aspect, what amount did you pay as tuition fee. Now we'll go with a basic example of how the tuition credits work and how the tuition fee works. So consider a student's yearly tuition amount is 10,000 Canadian dollars. Now considering the student studies for 5 years, paying the same amount of tuition fee each year, the student pays 50,000 Canadian in tuition fee for 5 years in total. Now each year the student files a tax return including his tuition form, tuition amount meaning T2002 form, and the student starts accumulating non-refundable tuition credit, which is again a certain percentage of the tuition fee. So again remember, it's not the entire tuition fee, but it is a good amount of percentage of the tuition fee. And generally a fixed percentage of tuition fee paid by the student becomes the tuition credit he or she accumulates that year. So what can a student do with the tuition credit? Now the first option is he or she can transfer it to parents, grandparents, partner or spouse, and there is a limit of 5,000 Canadian per year. So basically this is more directed towards Canadian citizens or permanent residents or who have their parents here who are filing the taxes in Canada. This may not be applicable to international students because their parents or grandparents or spouse or partner may not be here. But in case if they are here, what you can do is you can transfer this amount to them in order to benefit to lower their tax slab. So meaning that if your spouse or if your parents are earning good income, your tuition credit can help them save some money and get good refund back. And I'll explain how the tuition credit works in next few slides. The second option is you can carry it forward for future years and start accumulating tuition credits. Now this is what most international students will do because they don't have any family here and they want to accumulate tuition credits because it's very hard earned money which you're paying as tuition fee. And the third option is you can use it in the current year. So if they have very good employment income, they can use their tuition credits in the same year. Now that being said, these are the three easiest and simple situations. Now if you have a student loan or if you have a complex situation, then there'll be multiple options, but I won't go into depth because that is not a simple return. So these are the three simple options which most students will have. Now how are the accumulated tuition credits helpful? So let's say from our previous slide that our student roughly collected 40,000 Canadian in non-refundable tuition credits. Now the emphasis here is in non-refundable, meaning that whatever tuition fee you pay, you are collecting in non-refundable tuition credits. So if you leave Canada or if you don't work, you won't be getting that money or that tuition credit back in the form of payment. The tuition credits are only used to lower your income tax slab. So whenever you file your taxes, you are collecting tuition credits which will help you in future in order to lower your taxes, but you won't get any part of your tuition fee back. That's why it's not refundable tuition credits. So let's say the student collected 40,000 Canadian in 5 years as a non-refundable tuition credit, and now the student graduates, right? And the student gets a job with a yearly salary of 45,000 Canadian dollars. Now, there is one thing which Canadian government determines, that the federal basic personal amount for 2019, since this is 2020 year, I'll say for 2019 the federal basic personal amount is 12,069 Canadian dollars. Now, what does this amount mean? This means that any tax deducted in this amount of net pay will mostly be refunded, but in most cases, if you are working full time, the employers will not charge or will minimally charge tax till you reach this amount. So I'll explain this in two basic ways. First, if you are a student and if you are working part time, and if your T4 is lower than $12,000, whatever tax has been deducted till your net pay being $12,000, you will get it all back. But if you are a full time employee and if you start working and if your salary is $45,000, the employer will deduct taxes in appropriate proportions so that you are not charged more than what is required. So basically you won't be charged for first $12,000, and then you'll be charged according to the tax slab you fall on. But if you are working full time, you will be charged in appropriate manner. So the tax slab will be calculated as follows. So if your salary was $45,000 and the 12,000 is a basic personal amount. So now $32,931 becomes your taxable income. So this is basically what you are taxed on. Now every year the percentage is different on what you are taxed on, so it depends on that specific year. Now the tuition credits work as a charm here. So the student can use 32,931 from their tuition credit of 40,000 to lower their tax income to 0, and they can get all their taxes deducted on 32,931 refunded, which is a good sum of money. So again, you won't get your $32,931 back. The main emphasis here is on the taxes deducted on 32,000. So generally the amount when a student graduates and if he or she has 40,000 tax credits, and when they file the income tax for the first time using their tuition credit, they get a good refund on whatever tax was deducted. They get all their taxes back because your taxable income becomes 0. So roughly when you see your T4 and if you see that your income tax was maybe $4,000 or $5,000 on 45,000 yearly income, then chances are you may get that entire 4,000 5,000 money back if your tuition credit helps to bring your taxable income to 0. So that is why it is very important to collect tuition credits. And since the student has used 32,931 non-refundable tuition credit, they will still be left with 7,069 tuition credit because they had 40,000 tuition credits and they only used 32,000. So when they file for next year, they'll still have 7,069 tuition credit available. So that will not bring their amount to 0, but at least it will bring much lower, and then it will help you to get some income tax refund back. So that's why it's very important to file taxes each year and make sure you include all your correct slips, meaning your tuition fee form for sure, and that's how you will get the tuition credits accumulated. Now things to keep in mind: when you add your tuition fee to your return, the software will automatically calculate the amount of federal as well as provincial non-refundable tax credits. Now I won't go into detail, but just to give you a rough understanding, whenever you are working, you are deducted income tax which is based on your federal as well as provincial tax rates. So when the software automatically uses your tuition credits, it uses accordingly to lower your taxable income federally as well as provincially. So the provincial tuition credit works in a similar fashion as the federal tax credits. The amount may be a bit different because the rates are different, but it works in the similar fashion to lower your taxable income. Again, the situation for each student may be different as all calculations are based on individual student's profile. Now this calculation and example is just a very basic, rudimentary and simple representation for international students to understand how tax credits work. Now each situation is different and you may have a different situation than what is seen on this presentation, but this presentation is just to give you a basic idea of how the tuition credits help you in future if you accumulate them. But this is in no manner a concrete example of what exactly may happen. Now you also have an option of using tuition credits in the current year, in the same year. Now if a student has high income while they are still studying, they can use the tuition credit in order to lower their tax slab and get maximum income tax refund. So if you remember previously, as I said, 12,000 was the basic personal amount. So if you are a student and if you are working, if you had a co-op term or if you had a good high paying part-time job and if you made $15,000, you can use $3,000 of your tuition credit or tuition fee in the same year in order to lower your taxable income. Now remember, if you choose to use the tuition fee credit in the same year, it will not accumulate or it cannot be used in future years because you already used up in the current year. In case of any query or confusion, please clarify with authorities before proceeding further because you may have a complex situation which may not be limited to this presentation. Thank you again. Just to let you know, this information is current up to March 2020. For any queries, please consult appropriate authorities, especially if you have any errors for any documents like tuition fee document. Please contact MUN self-service helpline, and remember to store all your tax slips including T2202A form for at least 7 years, as CRA, Canada Revenue Agency, may ask for a proof in future if they want. Thank you very much. Have a nice day. Take care.